Hey guys, After, your guide and mentor, and back with another brand new video. Today, I'm going to take you on the subject of Private Wealth Club, which is my other firm. We specialize in capital raising, capital matchmaking in particular, when it comes to anywhere between 500,000 to a million to even 10 million, and at times more than $100 million, all dependent on what the situation is of the company and, of course, the request being made in terms of the individual or the group of people who are looking to raise substantial capital. So this is a private series. Of course, I'm going to be launching it to my subscribers. And if you're brand new in my channel, please don't forget to subscribe and turn the notifications on so that you will get updates on the brand new videos that I post on a regular basis. So guiding you through the fundamentals of capital matchmaking. Now, this is going to be the topic for the next 7 videos, particularly related to Private Wealth Club. And I want to begin by saying that this is definitely going to help you if you have ever considered raising funding, if you've ever considered going out and boosting your authorship, or being more recognized in terms of a credible individual or company when it comes to positioning in front of the right investors and the group of investors that will ultimately be investing in your business and your company. So our goal at Capital Matchmaking is to dive into the 7 videos and give you exactly a step-by-step process in which you can successfully use not just to raise capital, but to stand out and be more of a favorable option to investors uh, prior to your competitors, or when being betted against your competitors. So the first step, obviously, when it comes to capital matchmaking, is the idea of infrastructure. Now, you need infrastructure for multiple reasons, obviously. When you go in front of investors, when you're sitting down, or even communicating with investors, one of the biggest things that they'll always look at is, how are you set up? What is your infrastructure? What is it that your company is based off? Now, a lot of people know that this is the basics of the basics, right? You need to be set up properly. Um, could be an LLC, could be a C corp, S corp, doesn't matter. Preferably, a lot of individuals like to go with the idea of being a C corp. Sometimes they do it through LLC. So the dependency on how you set up your infrastructure is based on what your goal are, or your goals are short and long term. So when it comes to LLC, you begin, and a lot of people go and register with the SEC. They file a Form D. A Form D is essentially a document that allows you to reach out to investors, and of course do it compliant, which is exemptions. And what I mean by exemption is, so let's say, I'll give you an example. Let's say you are a real estate developer and you're looking to raise $100 million. Now, the first thing you want to do is infrastructure, which is you need to have an incorporated LLC. Hopefully, you're running for a couple of years already. You have experience, and then now you're looking to basically expand your portfolio and you're looking for investors. So that's the first step. Now, being in that situation, what you're going to have to do is you're going to have to comply with the rules and regulations of the Securities and Exchange Commission. They basically regulate the investment and financial industry when it comes to obtaining investors and soliciting to investors, as well as going out there and attracting the capital. So that's infrastructure. So the first thing is you register your company, and hopefully, when you consider raising capital, you already have registered a company now for a long time. You're essentially going into the market, and you want to register with the SEC. So depending on what you want to do, and by the way, full disclosure, I'm not an attorney or securities attorney, so I'm just giving you ideas and practical advice that you can actually look up at SEC's website itself. But I'm just sharing this knowledge because it's a critical step to actually raising the capital that you need when it comes to capital matchmaking, whether you do it with us or on your own. So yes, to go with the SEC, there are multiple regulations. There are Regulation Ds, and all sorts of other things. Now, the most common one is what we call a Reg D 506. A Reg D 506 is basically Regulation D, meaning an exemption. An exemption is essentially, you don't have to file or register your securities, being your company shares, with the SEC. And when you have to register a company share with the SEC, there's a lot of documentation. It takes so much time because now you're dealing with a government body, and there's a lot of compliance items, and of course a lot of auditing that has to be done prior to you registering. Now, to avoid all that, a lot of funds, private equity models, to hedge funds, to even, let's say, real estate developers, for example, in this situation, what they would do is they would file a Form D. It's an exemption, so you don't have to register your securities with the SEC, but you have to file a Form D, which is a notice that you're selling some of these securities on the market. And a Reg D 506 in particular allows you to go after accredited investors. And accredited investors, essentially, they have to meet a certain criteria. And what I mean by that is, they have to meet a certain level of income, they have to have a certain level of asset, either or they can be controlling a fund on their own, in excess of a certain amount of dollars. So there's a couple of things that we can consider an accredited investor. This is a critical component. Infrastructure is a critical component. You need that. You absolutely have to file a Form D when it comes to going out to get investors. I believe it's the best way to do it. If you're still confused and if you're not sure, you can always contact the securities attorney or go to the SEC's website and investigate what your situation is. I strongly advise you to do that. But if you're just thinking of raising capital at a significant level, the first step obviously is to make sure your infrastructure is correct. Make sure your LLC is registered. Your filings are up to date, by the way, with your Secretary of State. You want to make sure that you're not lagging any years or anything's not clear. Make sure your tax assessment is proper, that you filed all your taxes properly. That's very important. Make sure there's no judgments, liens, or any creditors that are outstanding. That's one of the biggest things you need to worry about when it comes to raising capital. A lot of people make this mistake in thinking, okay, I'll do this after I raise the capital. In fact, this is actually a big reason why most investors will never give you a single dollar if you're not careful, okay? So consider those things, consider the infrastructure, set it up the right way, and then aim for perfection after. So again, make sure your LLC is properly registered. When you have to go and get investors, make sure your taxes paid on time, your state filings are up to date and good standing. Make sure you don't have any outstanding creditors, judgments, or any type of liens that are going after you. Just make sure you clear those areas before you actually start fetching investors, before you actually start going to market for meetings, and of course sitting down in front of investors to get the money for your business. Now, that's infrastructure, and we're going to move on to the next episode later on. Okay, so thank you for listening. This is Ali Director, your guide and mentor. I'll see you on the next episode.